Okay, hello. My name is Shiva Rajgopal, and I'm the Kester and Byrnes Professor of Accounting and Auditing at Columbia Business School. And I'm joined by my good friends Luisa and Ilmi, and they're going to introduce themselves, and then we are going to jump right ahead and get into the conversation. Maybe we'll start with Luisa.
Thank you, Shiva, for inviting me again. My name is Luisa Palacios. I'm the Interim Research Director at the Center of Global Energy Policy at Columbia University and Adjunct faculty at the School of International and Public Affairs at Columbia University.
Hi, I'm Ilmi Granoff. Most of the week, I run a strategic advisory shop called Climate Technology Group. I'm also a senior fellow at the Sabin Center for Climate Change Law over at Columbia Law School. And I am currently the acting president of Carbon Tracker Initiative North America.
So, as you can imagine, since the last time we spoke, many things have changed, least of your job titles, but the world around us has changed. So maybe that's a nice launch off point, perhaps. From your point of view, what has changed? How has your thinking changed? Does the field have a future? Anything on your mind in terms of all the radical changes that we've seen? Maybe start with Luisa and then go to Ilmi.
Yes, Shiva. Many things have changed. So I am going to talk from the vantage point of energy, right, which is my scope of work. The first thing is that energy demand has surprised on the upside in a significant way, particularly electricity, which now has become a very important growth sector, not only in emerging markets, but in advanced economies. The second thing that has changed is our expectation of China's oil peak demand, and that has significant implications. And the third thing that has changed since our conversation is the reversal of Biden era energy and climate policies. So if you don't mind, I'm going to touch upon the first two. And I'm going to start with the energy demand. One of the interesting things that has happened and why it has come on the upside has to do with four intersecting forces. The first one has to do with the fact that, there's growth in the world and there's population growth, particularly in emerging markets and developing economies, and that brings about energy demand. That's the typical thing, historical thing that we have seen. So that's not a new thing. However, the other three are. The first one is energy transition is energy intensive. And what I mean by that is that the energy transition itself is demanding more investments in energy. And that is leading actually to a change in the way we consume and produce energy. And particularly when I mentioned is electricity. Electricity is growing faster than GDP. Energy demand is growing very fast. GDP has grown, but electricity is growing even faster than growth. And I think that underscores what the IEA has said is that we're in the age of electricity, and that is across the world. It's also present in advanced economies. Why do we have that? We have that because the energy transition implies electrification of end uses, and therefore there's more electricity demand flowing because of the energy transition trends. Climate change has also leads to increase in energy and electricity demand because of cooling demand needs, particularly in emerging markets and developing economies. And the third thing that I would say that is also important in this conversation is the AI component of this discussion. AI has been a particularly important force for electricity demand in the US and China, and has led to a completely different way to think about energy and energy security. On the second point about Chinese oil peak demand, this is a relevant issue because China has been the growth factor behind oil for decades, right? China imports around 11 million barrels per day. The thing about the energy transition is that it is a disruptive force. And as a disruptive force, it is disrupting particularly all across the energy sector, but particularly in transportation. And so if you have the most important market for oil imports also being the most important market for EV penetration, that is actually displacing oil demand. And so we have, for the first time, much more visibility about peak oil demand in China, with significant implications actually in relation to fossil fuel. Let me stop there, because I do want to come back to the reversal of Biden era energy and climate policies and the implications for national security.
Yeah, thanks, Luisa. This is great. One of the things I remembered from last time we did this in 2023 was how much Luisa and I agree, and how fun it is to hear her spit really interesting numbers and facts that I have not prepared, but really mesh well with the things that I was thinking about in prep for this session. What has changed? Well, I actually want to kind of emphasize some things that haven't changed, and then some things that have changed, because I think there's a bit of both, and there's some bad news and there's even good news. Yeah, I know that sounds less likely, but I think it's important to kind of look at both. We were just getting out of the pandemic when we did this in 2023, in terms of starting to get the data for what the first year and a half to 2 years out of the pandemic started to look like. And I think it's really interesting to now have a few more years on the back of that. My first fundamental observation, a starting point, is that the transition of decarbonization is happening. It's still happening. It's still very much happening. This is where I kind of depart from, Vaclav Smil and Daniel Yergin, many other analysts that sort of say, well, it's only going to happen if, certain policy contexts happen. It probably won't. It'll be all new addition to, capture new demand will come from, capturing new demand, clean energy will come in and take that, but we'll just be in this long plateau or even growth in absolute terms for combustion, particularly of hydrocarbons. I think Luisa slid by a key concept, that I really agree with, which is, when I say decarbonization, I mean that we're largely, although not entirely, substituting hydrocarbon molecules with electricity and meeting power and heat demand as it grows, at the very least, from electrons instead of combustion, instead of molecules, particularly hydrocarbons. I think it's techno-economically inevitable enough at this point in a few sectors that it is likely to happen in most, if not all, because those sectors where it's techno-economically inevitable, like power and light-duty transportation, will drive innovation that then affects other sectors, even as we're still learning the chemistries that allow us to, say, provide heat for heavy industry and combine it with electricity. So I think that that's happening. The rate is very uncertain. 2050 net zero, pretty unlikely. But that's distinct from whether we achieve largely gross zero and net zero at all. And I think we're going to live in a very hot, decarbonized world. I think that that's still happening regardless of short-term changes. One of the really interesting data points, my business partner is my brother, Dean Granoff, and he was digging into one of our favorite reports, the IEA's World Energy Investment Outlook. I think this is really, really interesting, especially because it focuses on capital investment, which is a very powerful forward-looking indicator. And if I can stylize what we started to unpick from there, it was that you had fossil fuel capital investment outpacing clean energy from 2015 to 2020. More capital investment in the fossil fuel energy system, both supply and demand for fossil fuels, not just fossil supply. Then the energy shock hit from the pandemic. As we emerged from that, in the first several years, sort of 2021 to 2020 to 2022, 2021, fossil fuels the system took a bigger hit than renewable energy. Coming out in terms of capital investment, coming out in the sort of 2021 to 2024 period, we started to see renewable energy and the clean energy system, the demand technologies as well, twice as much capital investment in clean energy than fossil energy systems. And what's really interesting is if you look at the 2024 data, you start to see that gap, the ratio between capital investment in the fossil system and capital investment in clean energy is starting to widen, which implies that what's happening is not just that clean energy is capturing the new additional demand, but maybe beginning to erode demand from sort of capture market share from the fossil energy system. Now, whether that started to happen and gets reversed temporarily or whatever, but starting to see the inkling of that. You also saw that the cost of capital for clean energy has declined pretty significantly over this sort of last decade. That's really important because that hasn't happened commensurately with the fossil energy system. It's quite important. So I want to emphasize that. I think to my mind, what that means is not that there's this issue with decarbonization where, the existing system perpetuates at its current scale or with like very moderate incremental growth. And then you have on top of that, the clean energy system, but rather we're at the front end of clean energy taking over the system. And it will likely be a long tail and asymptote, where sort of Zeno's paradox, where over time demand for the fossil system is halved and halved and halved and halved, but sticks around a long time. But that to me is the direction to travel, regardless of short-term changes. Two other observations, and then I'll shut up. One is growth. At this point, thinking about where the clean energy system is and the fossil energy system, I think it's very hard to conceive for any given economy in the world of a high growth path for an economy dominated by fossil fuels. Like with an energy economy that looks like 2015, it's hard to imagine an economy that is high growth and high productivity with that recipe. There's diminishing productivity returns to investing in fossil fuels because we've basically perfected that system. I mean, if you think of how perfect the internal combustion engine is with, decades and decades of refinement, there's just very little productivity gain to marginal additional investment. And we see these incredible productivity gains in each technology in the low carbon system, starting with solar, but now obviously we see that with batteries. It's most noticeable, but there's no reason not to see that as a larger trend. So it seems like the high growth path for any individual economy, if they're searching for growth, is in the low carbon market. And then the last point I'll make before I shut up is one of the things that we emphasized last time was volatility is a big part of the transition. And is one of the underappreciated variables of the transition to a low carbon economy. You can call it a disorderly transition. I just like to call it kind of life, sort of how the world works. When we just don't have the social and political institutions in enough jurisdictions, at least, to make another industrial revolution sort of happen in an orderly way. And so that productivity comes with sort of Schumpeterian disruption. And I think that if anything, even though we emphasized it last time, short-term changes like the change in administration, rollback of the Inflation Reduction Act, China reaching peak oil, we underestimate it. Even though we emphasized volatility, we've underestimated that. And why is that? Because I would just point to this sort of macro point that in a transition, it becomes very hard for incumbents to anticipate and plan for demand. The data becomes very murky. So you will get CapEx bottlenecks all over the place and that drives volatility. You'll have underinvestment and overinvestment, underinvestment and overinvestment. And that will happen at the global scale and in each jurisdiction with supply-demand mismatches. And that's going to drive a lot of volatility. And that to me is the big picture. So the idea that we can divine from short-term accelerations or decelerations the larger pattern, I think, is a mistake. we don't want to confuse the sawtooth of that volatility for the overall trend, and understand that that is going to be our future for the coming decades, is a lot of volatility. I'll leave it at that.
So let me pick up on a couple of things you mentioned: volatility, the spread between capex for fossil fuel versus renewables. I'm sure there's stark regional differences, right? U.S., China, rest. U.S. probably got a boost because of the IRA and so on. So maybe this is a good time to go to Luisa and speculate, perhaps. What has the grand Biden unwind done to the world in general? We've unwound many policies, a lot of investments. The EV $7,500 credit is gone. Lots of headlines coming out of Washington. Help us make sense of that, if you might, Luisa.
So I think there's a combination of things. First is the reversal of the Biden era energy and climate policies, and then is the trade wars, both of which are coming together. And both of them are going to have, I think, important implications, both for the U.S. and for the global economy. And I think not in obvious ways. In one sense, it will, in my view, advance the energy transition. In other ways, it will reverse the energy transition. And in other circumstances, it will just stagnate. And so I think it's very difficult to tell exactly how things are going to evolve. But let me just, I think, point to the underlying theme that is driving all of these things. Energy has become a national security issue. And so we're now seeing energy from the national security standpoint. And that is a major change from the last time that we were discussing this, because we were discussing this from the point of view of sustainability. Not that sustainability doesn't matter anymore. It's just that it's now on the back burner. And affordability and reliability and energy security have always been there, but now they have become center stage. I do agree with Ilmi on the volatility of things, but unlike the emphasis on volatility of prices, I think what we're seeing in the world is volatility of policy. And that is very problematic for anything, not only for the fossil fuel economy, but also for the new energy economy. So it doesn't just impact one, it impacts the whole energy structure. And the other thing is that when you look at energy, not only from a sustainability lens, but also from a systems lens, what you see is the energy transition, again, is a disruptive business proposition, a technological disruption of how we produce and consume energy. What that means is that the 80% of monopoly that fossil fuels have had in the production of energy is being disrupted. And that is happening regardless of changes in policy. In that I agree with Ilmi. What I think is less understood is that I do think that disruption does not mean that fossil fuels go away. And I think one of the things that we're seeing with what is happening in U.S. energy and climate policies and the impact it's having in the world is that, to me, your question about differentiation between regions is very relevant because it is now much more diverse. And so we cannot talk now about generalities. Where is the energy transition going? It depends. Not only it depends in terms of regional considerations, but in terms of technologies and actually sectors. And so let me give you an example of what it means. If I mentioned before that we're now in the age of electricity in the fossil fuel era, what that means in the fossil fuel spectrum, what that means is that it helps natural gas and coal. It really does not help oil because now, if you're in the age of electricity, you're electrifying everything. It probably is going to lead to a much more important, longer-term transition for coal, for example, in Asia. In China and in India, one of the things that we're seeing is that am I now going to lead to a dependency? So it's dependency on everything, a dependency on energy in general. And so I might want to stick to coal for a longer period of time, even if, as Ilmi has pointed out, every new addition of energy in emerging markets is really dominated. So the delta is dominated by clean energy. But that doesn't mean that coal is going away. It is not going away. So when the discussion about energy addition versus energy transition is, yes, I mean, we can discuss it for a long time, but is really very specific. And it depends enormously on sectors and regions and technologies. And so what I see is that what energy security means is that it is going to benefit natural gas and coal. It is going to hurt oil. And what trade wars means is that it's going to help power. It is going to hurt. It's going to benefit power. It's going to hurt transportation. Let me tell you what I mean by that. China produces about 70% of the world's EVs. So it is the dominance that China has in general in clean energy technologies. We have never seen that, not even in oil. If we take into account OPEC, for example, OPEC in which we think is like the epitome of geopolitics, in its heyday or in its peak, it was 40% or over 50% of 40% of total oil production. We're talking about that China has a dominant position in all clean energy technologies, not only on the production of the clean energy technologies, but in their supply chain. So if you look at critical minerals from the mere production at the upstream level, from the refining system, from the production of clean energy technology, the dominance that China has is unparalleled and has never been seen in oil and gas, in coal. And so that actually, as the energy transition has unfolded, I think it has brought, we had the impression that geopolitics was going to disappear because the energy transition in a way is a deglobalization of energy markets. That's fine, but in India, for example, do I really, one of the things that I see with in India is a desire to bring supply chains into India for if they're going to go into renewables, we want to be producing our solar panels. We want to be producing our EVs. We want to be producing because the desire to localize energy is also a desire that comes with national security implications and to diversify away from and not create dependencies. You're not going to go from Saudi Arabia now to China. And so the energy transition itself has brought about just new sources of geopolitics and national security implications, which are explaining a lot of what is happening because you have on the one hand, the U.S., that has become the most important oil and natural gas producer in the planet. And then you have China, which has become the most important producer of clean energy technology in the planet. And so I have a colleague that has presented this as a competition between petrostate and an electrostate. And so it's very difficult to just dissociate the energy transition from this kind of geopolitical issues. That said, I do think that, so you have acceleration from the point of view of China, and not only in its own economy, we are seeing, and that's why I brought the issue of pickle demand, but now China has overcapacity in production of clean energy technologies that are going to be dumped in emerging markets and developing economies, probably accelerating some of the energy transition in some aspects. But climate change is also bringing some issues of hydroelectricity, for example. And so the issues of hydroelectricity are bringing about the need for baseload in a lot of emerging markets and developing economies. And now you have some of these emerging markets reversing in terms of needing to have coal or natural gas thermal plants, and even now revival of nuclear everywhere across the globe. So I think I don't want to continue extending myself. The point is that there are unintended consequences that come with these kinds of systemic transformations that oblige us to look at things not only from just a climate lens, from a multiple of objectives and a multiple of considerations. That means that everything. So, is the energy transition happening? Yes, it will be energy transition happening. It is still happening, but everything is happening at the same time. It is reversing, it is stagnating, and it is advancing.
Okay, so we're running out of time. I'm going to run a rapid fire round. So the New York Times had a great article making precisely the points you're making, Luisa, that in the US we are doubling down on oil and China is running away with EVs. And clean energy, partly because of subsidies. So the question for you, is that A, bad for the US and bad for the world? 90 seconds. Luisa first, maybe Ilmi next.
I think it's the U.S. cannot afford not to compete on energy transition technologies. It's just about the future of technologies. You want to be present in the technological future. So to me, it's that even in considering that geopolitical competition, you do have the U.S. is an energy powerhouse. There are a lot of things that the U.S. can do within the current resource base that it has to continue accelerating and leading to technological change that will allow to catch up, maybe not in solar or wind, but in other kind of clean energy technologies.
Ilmi, last word as always.
The big question right now is how anti-market our U.S. reactionary policy can be. How much it will fight the market. The ungrammatically named One Big Beautiful Bill Act was passed over the objection of investors, utilities, the market. And the way that I think of it is the Inflation Reduction Act, China had a head start on the clean energy economy. We started in the US racing to be in the mix, in the race. And then we decided to tie our shoelaces together in the race. And now we're going to try to kind of run a race with, you see the executive order that came out yesterday saying it's wind and solar are foreign dominated technologies. It's just a bury your head in the sand situation because those are the technologies that will make an economy productive. They're cheap and abundant and only becoming more so. And so, and underpin productivity in all other sectors because they're cheap electrons. So I think we're kind of in a difficult situation in that regard. I do think that the transition overall happens either way. It's just who captures the benefit of that. And it's going to be a bumpy ride.
So as always, these lead to more questions than answers. But thank you so much. Maybe we'll have to run a repeat the next time. This is becoming a long soap opera. Thank you, Luisa and Ilmi. Always insightful. Thanks again for doing this.
Thank you, Shiva.
Shiva.
It's always fun.
Thank you, Amy.